This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Big gains. Stocks rally to close an unusual quarter that saw the Nasdaq gain 10%. And the next 3 months could get even more interesting for investors. Betting the farm. Why the key battleground state of Iowa is taking on greater importance this presidential election. And paying you back. Our market monitor looks for dividend investments and has a list of stocks he says you should have on your buy list. Those stories and more tonight on Nightly Business Report for Friday, September 30th. Good evening, everyone, and welcome to this last day of the quarter and of September. I'm Tyler Matheson. Sue Herrera is off tonight. Well, investors ended the quarter in a good mood. Stocks rose sharply, and once again, it was the financial sector that led the way, as it has on and off over the past 3 months. Now, yesterday, bank stocks sandbagged the market. Today, they lifted it on unconfirmed reports that Deutsche Bank has reached a deal with the U.S. Justice Department. More on that story in a moment. Meantime, the Dow Jones Industrial Average finished the session today up 164 points at 18,308. Nasdaq added 42 and the S&P 500 gained 17. And today's rally closed out an unusual third quarter, one that saw turbulence created by the Brexit vote early on, fresh record highs later, and continued uncertainty about interest rates. Of the three major indexes, the Nasdaq was the big winner for the July to September period, up nearly 10%, as you see there. But now we start the fourth quarter of 2016, and as Bob Pisani reports, it could start to get really interesting for investors.
If you're an average investor, you probably don't want volatility in the stock market. But professional traders like volatility because they make money trading price swings in stocks. Aside from some volatility earlier in the year as oil dropped and a little volatility when the UK voted to leave the European Union in June, there hasn't been much volatility this year. Traders hoping for big market moves this September around the Clinton-Trump debates or the Fed meeting were also disappointed. But hope never dies, and traders are pitting their hopes for market volatility in the fourth quarter on two events: the presidential election and the Fed meeting in December. It's not clear either will produce much market movement. The market seems to be positioned for a Clinton victory with the House remaining Republican, a divided government. Should Trump win, that would certainly cause volatility, though many point out that a major source of that potential volatility is Trump's antipathy for Fed Chair Janet Yellen. Any disruption to the Fed, particularly if Yellen resigns, would cause a problem for the markets. And that brings me to the Fed meeting in December, where markets believe there's a roughly 60% chance the Fed will hike rates. The Fed is the big gorilla in the room. They are the only one of the long-term movers of volatility out there. Is there anything else? Well, there's a recession, but that's not on the horizon. And of course, you could have some kind of exogenous shock, like a terrorist incident. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Kevin Nicholson joins us now to talk more about the markets and what he expects in the fourth quarter. He's chief market strategist at Riverfront Investment Group. Mr. Nicholson, welcome. Good to have you with us. Bob Pisani just teed up a lot of things, from a possibility of an exogenous event somewhere around the world to the resignation of Janet Yellen if Mr. Trump became president. What do you think the biggest variable is for investors as we go into this fourth quarter?
Well, I think the biggest variable is the election. I think that if Donald Trump wins the election, then you're going to see market volatility. You'll probably see the stock market go down because is just the fear of the unknown. If Hillary Clinton wins the election, then it's a little bit more of the same. And so I think that at that point, the market could grind higher.
So the underlying fundamentals of the market, as you handicap them right now, where are they on a scale of 1 to 10, with 10 being really good?
Oh, I would probably say the fundamentals of the market would probably be about a 6. I mean, what we've seen with the economic numbers that have come out this quarter in the U.S., we've kind of seen a mixed bag of economic numbers. So I think that right now we're not operating on, full cylinders, and we're not gung-ho, but at the same time, I'm not going to run away from the markets either. I think that, we're positioned in a good place.
Let's talk about some sectors that you think might be able to push higher no matter what happens. And let's focus on two of them: energy/oil and financials.
So with energy, I think that with OPEC, the rumors this week that OPEC has come to an agreement to cut production, and I think that's really good for energy. It puts a floor on oil at about $40. It also allows the U.S. Drillers, more of the shale drillers, to be able to use those drilled but uncompleted wells, bring them back online. And so that will put oil in a range-bound a state of $40 to $60.
So if the
we expect to see some
if the deal
volatility.
Sticks, it's good for the oil stocks, good for the shale drillers. What about the financials, and what is your one favorite sector over the next quarter?
Okay, with financials, I think that financials are probably going to do well as we get closer to a Fed raising interest rates. The Fed held off this last meeting, but we do believe, and they have indicated that they are going to potentially hike at some point this year. And we think that that hike is going to come in December. And, you know, obviously higher interest rates are going to help banks as far as their net interest margin. And so we think that, you know, financials is a good place to be going in the fourth quarter.
All right, Kevin Nicholson with Riverfront Investment Group in my home state of Virginia. All right, to the economy now. Consumer spending softened in August. Personal consumption, which measures how much Americans spend on just about everything, was unchanged from the prior month. And that was the weakest reading since April, and a change from the second quarter, which saw consumer spending advance at its fastest pace since 2014. Incomes, meanwhile, grew more slowly last month. Well, despite the pullback in spending, another report shows that sentiment rose in September. That suggests that households are feeling pretty good about the economy. And when consumers feel good, they do tend to spend more, which in turn helps economic activity. American households have been the main driver of economic growth this year. Well, a concerning statement out of Cognizant, something no shareholder wants to hear. The IT services provider says it is conducting a corruption investigation. The probe, which is in its early stages, is centered on possible violations of the Foreign Corrupt Practices Act related to payments in India. The company's president abruptly resigned, and no reason was given for his departure. The revelations caused the stock to drop 13% in trading today. Wells Fargo's CEO could receive a bigger payout than originally thought. According to a USA Today report, if John Stumpf were to retire, he is still positioned to collect pension accounts and stock valued at more than $134 million. That's more than the previously reported $123 million, and his potential payout has grown, apparently because he exercised options to buy an additional 500,000 shares since the end of last year. This comes despite the $41 million forfeiture he announced earlier this week. More now on that Deutsche Bank story, which, as we reported, was a big driver of today's stock market rally. This as concerns eased about the health of Germany's biggest bank. First, the CEO expressed confidence in the firm's financial position. Then there was a report, though it's not been independently confirmed, that the bank is close now to a settlement with the U.S. Justice Department related to its dealings in mortgage securities. That settlement, according to the report, is at a price well below the $14 billion originally floated. And with that, the stock took off, rising 14% and easily, making up all of yesterday's losses plus more. Annette Weisbach reports tonight from Frankfurt.
There's a lot of relief, I'm sure, on those towers behind me, which are the headquarters of Deutsche Bank. There are reports that there might be a settlement with the Department of Justice of $5.4 billion US, which is a lot lower than the number previously reported, which was $14 billion US. But still, that number might still be incorrect, because according to the law in Germany, a company has to react immediately if a number is out in the market which is close close to the real number they are discussing. So take that number with a pinch of salt. Of course, the whole crisis comes at a very bad timing for Deutsche Bank. There's a general feeling that the European banking sector is not very stable. And of course, Deutsche Bank, being one of the biggest banks, is very much in focus here. So the lender is trying to fend off certain speculators. John Crine, the CEO of the bank, wrote a letter to its staff reassuring its staff about the stability of the bank and also saying there are certain forces in the market speculating against the bank, that they have to do what they can to fend those speculators off and reassure clients about the stability of the bank. This is Annette Weisbach for Nightly Business Report in Frankfurt.
Still ahead, battleground breakdown, why the cornfields of Iowa could play a very big role in this year's presidential election. Federal investigators have found one of the black box recorders from yesterday's commuter train crash in Hoboken, New Jersey, which we told you about. The crash killed a woman and injured more than 100 others. The data recorder will help investigators identify key information like the speed of the train as it approached the station. With the election a little more than a month away, Iowa is in focus. The state has an early voting window, one of the few states that allow weeks of in-person voting ahead of Election Day. And this year, it's the only battleground state to do so. Andrew Ross Sorkin reports tonight from Des Moines.
Every 4 years, Iowa's cornfields become battlefields for presidential campaigns. I-O-W-A, you should know it, vote today. 2016 is no different. Early voting began Thursday, and the rest of the country is looking to the Hawkeye State, which has voted Democratic in the past 5 out of 6 presidential races. Iowa didn't gain its bellwether status because it's representative of the country. According to the Census Bureau, the state's population is more than 90% white. Its economy driven by farms and commodity crops. And farmers in Iowa have a lot to say about the issues impacting them most.
Being taxed to death is no way to grow an economy. I mean, it's like if I wore stiletto heels out to the cornfield. It doesn't make any sense. So we need to have serious conversations about what are we going to do about this tax policy run amok.
One of the important issues for us is getting more trade. Agriculture is one of the things that has the most to gain from TPP, and NAFTA's been good for us too. We need more exports.
As a result of these concerns, candidates shift their focus while campaigning here. Bruce Rastetter is advising Donald Trump when it comes to agriculture.
What needs to happen?
I think 2 things. I think one, if you think about agriculture and farming, we have unfair trade agreements that are harming income levels and not putting agriculture and other industries in the U.S. on a fair playing field. 2, we have over-government regulation that's increasing costs and creating uncertainty for your business. Right. So the combination of those 2 is not a good thing.
But Clinton is focusing her ground game away from the farms in Polk County. In Des Moines, where she spoke Thursday, the Democratic camp hopes to close the gap by courting a more urban and younger demographic. Now, here in Des Moines, Iowa, Democrats have a registration advantage, but millennials, those under 35, are growing remarkably, twice the national rate. Now, Trump didn't win in the caucuses in the state, but he is leading the polls. For Nightly Business Report, I'm Andrew Ross Sorkin in Des Moines, Iowa.
Wall Street has its best initial public offering of the year so far, and that is where we begin tonight's market focus. Cloud computing company Nutanix hit the market, and in a big way, more than doubling in its first day of trading. It was one of the most anticipated IPOs this year, in a year with not many offerings. Shares priced last night at $16 each, and that was above the expected range. Nutanix finished up 131% at $37 even. The aluminum maker and former Dow component Alcoa says it will split in 2 effective in November after the company's board approved the move. The company will separate its fast-growing plane and car parts business from its traditional aluminum business, a move that aims for higher returns amid the prolonged slump in commodity prices. Alcoa up nearly 2% on the day to $10.14. The spice maker McCormick raised its full-year guidance after reporting quarterly earnings that beat estimates. The company saw sales rise 3% from last year, with adjusted earnings per share up 21%. McCormick credited the growth to products that are, quote, on trend with consumer demand and healthy and high-quality flavors, particularly in the U.S. and China. Shares of McCormick up better than 2.5% on the day to $99.92. The activist hedge fund Elliott Management doubled its stake in Mentor Graphics to more than 8%. Elliott said shares of the electronic design firm were undervalued and called on the company to increase shareholder value by enhancing efficiency and pursuing those strategic opportunities that they always talk about. Mentor Graphics popped 7% to $26.44. And Costco has come under fire for selling fake Tiffany rings. A federal jury ruled yesterday that Costco should pay $5 million to the jeweler for its counterfeit diamond engagement rings branded with the Tiffany name. The jury said the luxury retailer is also entitled to punitive damages, which are still to be determined. But investors seem more interested in the company's higher than expected earnings that came out after the bail yesterday. Shares were up today more than 3% at $152.51. Well, our market monitor likes dividend stocks that he says are less susceptible to rising interest rates and could be a good source of income in today's environment. Last time he was on, that was back in January, he recommended CVS Health. It's down 6%, AT&T up 18%, and Ford basically flat, off about 1%. He's Mark Spellman, portfolio manager at Alpine Funds. Mark, welcome. Good to have you with us. Are you still comfortable with each of those picks you made last January or not?
Well, if you add in the dividend, when back in January, AT&T's dividend was about 5.5%. If you add some of that back in, that stock actually was up over 20% on a total return basis. We like the stock. We have cut it back. We think fair value is about $42 a share, so there's limited upside, but it is a good source of income, and we're comfortable holding it. Ford, we're a little concerned about. They're still making tons of money on light trucks and SUVs, but the car market has become very competitive. Again, if you that stock had a 5.5% dividend, and if you add that in, you did make some money on that. CVS we actually like going forward, and we think it's been susceptible to these hearings you've seen about Mylan. The CEO of Mylan was in front of Congress talking about EpiPen prices going from $100 to $600. And we think she was trying to deflect some of that criticism onto the pharmacy benefit managers, which CVS is one of. And we think that's kind of unwarranted. We think the stock is looks like a very good value right here.
It is one of your three picks this time around. It's currently 89. You've got a 106 price target on it, so you still like that one. Let's move on to Lowe's. Sure. You got an $89 price target on that one, currently trading at about 73, mid-70s.
Yes. Lowe's continues. Their results have been okay recently, but the macro environment for Lowe's continues to be very good. The employment numbers are good. Home ownership rates actually continue to increase. We like that stock. It's a very reasonable valuation. They've raised the dividend by greater than 20% in each of the last number of years. We think that's going to be going forward the same kind of profile. We really do like Lowe's here.
All right, and third pick is American Tower. Tell us what they do and why you like them.
Yeah, American Tower is a vital part of the infrastructure globally now, and it's one of the top 10 positions in our global infrastructure fund. They own 140,000 towers throughout the world. You're using your phone for a lot more than you used to a number of years ago, and so are businesses. And they sign long-term leases to lease these towers. Mobile data growth has been going up by greater than 50% over the last number of years. We think that's a trend that's going to continue. And because we like dividends, this is a stock whose dividend has doubled in the last 3 years, and we think it's actually going to on pace to increase another 20 to 25% going forward. It's about a 2% yield right now.
140,000 towers. That's amazing. Yeah. All right, a quick thought here, if you don't mind. Will the market end higher than it is today?
I think, all along we've been looking at about a 6 to 8% market this year because of the multiple is kind of high, and we were basically getting it from earnings growth. But it underscores how important dividends are and rising dividends are as well, because 40–50% of the total return from the market is going to come from dividends. We think you're at the higher end. Maybe you get a little bit more. There's a lot of worries out there as far as the elections are concerned. So it might be a little bit volatile, but we think 8% is probably about what you're going to get this year.
We'll take it. Mark Spellman, thanks, with Alpine Funds.
Thank you.
Well, it has been a year since customers began dipping cards rather than swiping them at cash registers across America. And those cards, known as EMV chip cards, are intended to create far more security and prevent the use of counterfeit credit cards. But as Contessa Brewer reports, the switchover has been bumpy, with retailers slow to adopt the change and confusion on the part of customers.
600 million chip cards have now been issued to consumers, about half of all the cards in use. But those high-tech cards can't be used at 2/3 of the nation's stores, since fewer than 2 million retailers are ready to accept them.
This is an incredibly complicated undertaking, both on the consumer side, banks undergoing enormous $1 billion in costs to upgrade to the new chip cards. On the merchant side, it's an enormous undertaking for merchants as well.
I would say that for Main Street retailers, the cost of the equipment is roughly $2,200 for each terminal they have to put in their store.
Before the EMV chip technology transition, credit card issuers were liable for fraudulent in-store purchases. Now the responsibility has shifted to merchants if they haven't upgraded to using chips. The chip technology, known as EMV for Europay, MasterCard, Visa, creates a unique code for each transaction with a tiny microprocessor on the card communicating with the terminal. Cuts down on the possibility of fraud at the point of sale. MasterCard and Visa report fraud has dropped by roughly half at retailers using the EMV technology. But overall, fraud is actually on the rise this year, expected to reach a record $4 billion.
Criminals are, understandably, migrating their fraudulent activities from merchants that have upgraded to chip readers to those that haven't.
A National Retail Federation survey shows 86% of retailers expect to have EMV chip systems up and running by the end of the year. The NRF insists stores have done their part and blames the credit card issuers for dropping the ball. Almost 60% of stores that have not adopted the chip technology say they're waiting on their certification by the card industry, more than half waiting 6 months or longer. In the meantime, customers are getting the hang of it, even if they wait a few seconds longer. A NerdWallet survey shows 78% of Americans say they have positive feelings about the chip cards. Of course, there's another option. Customers may want to pull out their smartphones. Apple Pay, Android Pay, and Samsung Pay offer the same security as chip cards. For Nightly Business Report, I'm Contessa Brewer.
Coming up, taking a swing. Will the Ryder Cup give golf the jolt of excitement that it so desperately needs? There's a lot of data on tap, and here's a look at what to watch next week. On Monday, we will get 2 reads on the manufacturing sector. Tuesday, the economy will likely be a big topic of conversation in the vice presidential debate. Friday, the employment report for September is due out, something the Fed, Wall Street, and Main Street will all be focused on, and that is what to watch next week. Well, there is no bigger event in the world of golf than the Ryder Cup, one that pits the best golfers in America against the best in Europe. It only happens once every other year, but this year there's more at stake than just the cup. The business of golf is also looking to generate excitement around the game. Dominic Chu reports from the Hazeltine National Golf Club in Chaska, Minnesota.
Some of the best, most dramatic golf of the year will be played over the next few days here at Hazeltine. The crowds gathered will be big, and some estimates have 250,000 fans showing up for the 3-day event. And what the world of golf is hoping for is enough excitement to energize casual golfers, as well as reach out to those who are thinking of taking a swing at the game.
It's unlike anything that we get to do here on tour and sport. You know, when you show up here on Friday morning, the first tee, and have that emotion running through you, and the USA stripe on your, or flag on your shoulder, and realizing how important this is to so many people besides yourself, and the pressure that goes with that.
But you don't necessarily have to be here in person to feel the energy. This year's Ryder Cup will have a lot of television reach as well, touching nearly 500 million homes in 160 countries. It used to be that the U.S. dominated the competition and has won 25 of the last 40 cups ever contested. But golf has become much more global, and European teams have won 8 of the last 10 cups. Expectations are high for the U.S. team.
The country is ready for a win. I think the Ryder Cup is ready for a Team USA win. But we know it's going to be tough. Every single Ryder Cup, it's always an unbelievably tough competition. This will be no exception.
Golf could use some more positive momentum. For the first time in years, participation in the game is on the rise, albeit modestly. But there are seismic forces at work against the industry. Most recently, sporting goods giant Nike announced that they were going to stop making golf clubs, balls, and bags and focus solely on clothing and shoes. German competitor Adidas is interested in selling its TaylorMade golf equipment business, and golf retail outlet Golfsmith declared bankruptcy as well.
The way that golf's being consumed is moving a bit away from the traditional, I'm going to go out to the golf course, I'm going to spend 6 hours there, into more, shall I say, concentrated bites. And you're even seeing golf moving away from the traditional golf facility. Innovation is going to be important, and how these particular manufacturers position themselves along with the retailers to adapt to the change in how people are consuming the game. And that's going to be, I think, where the battle's won or lost.
The thousands of fans here at the Ryder Cup in Hazeltine and the millions watching at home could be the next step in helping golf overcome its recent troubles. For Nightly Business Report, I'm Dominic Chu here at the Ryder Cup in Chaska, Minnesota.
And that is Nightly Business Report for tonight. I'm Tyler Mathisen. Thanks for watching. Have a great weekend, everybody, and we'll see you back here Monday.